Unfiltered opinions.
Sometimes you have ideas and you're not quite sure why.
As you secure the bag.
Sometimes you meet people and realize there's probably a reason why you stayed in touch.
Just listen.
Sometimes all the pieces just come together by themselves.
I'm Jimmy Moyaha.
And I'm Simon Brown.
Welcome to Insider Exchange.
In our deep dive this week, we are taking a look at markets and markets under the current geopolitical conversations. We're going to be reflecting on some of the tensions that are happening around the world. We're going to be looking at how this has been filtering through into the markets and potentially what could come of it. I saw the post by our good friend Charlie on X saying that every market, typically around this time of the year, is being outperformed by the S&P, or even historically, I think it's over the last couple of years. Let me find the post. But the S&P effectively outperforms markets, and for the first time this year, we are seeing that the S&P is in the red, and other markets are doing much better. And that was quite a...
And Europe in particular. So Germany did that €500 billion bonanza bazooka type announcement last week, which also says that defense spending won't count towards budget deficit for their ratios. So in other words, knock yourself out and spend wildly. German bonds went absolutely crazy. We've got most of the European markets. So France is back at early 24 levels. DAX is just at all-time highs after breaking sort of in late 23. Eurostoxx 50, same story, all-time highs. FTSE, yep. Just off. They hit the all-time high last week, but we are seeing markets, and even our own little J200 top 40. Where are we? There we are. We almost got, 4 weeks ago, all-time highs last week, almost matched it. What we're seeing, quite frankly, is markets kind of moving and the US not. And I think there's two things. When the US has a blowout decade, as we saw, for example, in the 90s, at some point it reverts to the mean. And how does it revert to the mean? Well, it can either collapse or it can go sideways. And in the aughts, it went sideways. It took the Nasdaq 15 years to get back those .com highs. It took the S&P a decade to take back those .com highs. Now, there was a financial crisis towards the tail end of it, 100%. But the returns that we've seen are outsized, which means either there is a new reality in town in the sense that, well, tech is different and asset light and et cetera. So maybe the returns that were previously expected from indices are no longer applicable. I'm not sure I subscribe to the this time it's different scenario, or it's just run too hard. And therefore, how do you get back to the mean where you get lower returns in the decade ahead? And then, of course, it's the orange one in the white building, and that is just making mess.
I found the tweet, right? It says, US stocks have been outperforming international stocks over 16 years. By far the longest run of outperformance in history. But so far this year, we're seeing the exact opposite. International stocks up about 8.3%, while the S&P 500 is down 1.7%. And that's quite a big difference. It's almost a 10% difference, right?
Yeah.
So that's, first of all, it's a very telling sign. But when you look at the markets that are up, right? So European markets, the likes of Austria, Germany, Spain, Sweden, all in that list, Finland as well. South American markets, the likes of Chile, Colombia. When you look at Asian markets, China's on that list. The Eurozone is there from a European point of view, as is Greece, of all people. France is on that list. Europe.
Okay.
South Africa ranks higher than the UK at the moment in terms of global equity ETFs for 2025.
And this is total returns in dollars.
Total returns in US dollars. Yeah. We are sitting just shy of 12% in total returns, whilst the US S&P is negative 1.7%. The only other markets that are in the red really are Argentina, Saudi Arabia, Taiwan, New Zealand, Malaysia, India, Indonesia, and Thailand. Now, for most of those markets, they are smaller markets anyway. Yes. India might be a bit of a surprise there, but at the same time, India is outperforming China in terms of GDP. So, you know, their equity markets can be forgiven. They're a growing economy and they're doing exceptionally well on that front. But the surprise here, of course, is the fact that the US is not only not in the top 10, they're negative.
When there's a lot of green on the screen.
That's it. And there is a lot of it. The Asian markets that were the scary markets or the markets not to get into are all in the green. Hong Kong, South Korea, Singapore.
And it's probably a blend of both. It's probably a 16 years of insane performance can't carry on unless you believe that it can. And there is an argument for it. I'm not convinced by it. You chat with folks like the what's his surname? I forget his surname. Eddie, somebody from 10X Investments, the Smart Oaks. And I'll tell you, like the data just says, and throw into it uncertainty, confusion, supply chain challenges, all of that. And US markets, 1.7 down is not exactly dying.
It's not the worst thing in the world. Okay, fine. Let's look at the other data side. Let's look at the performance of the dollar index.
Yeah, so dollar index. I watched so the dollar index is a weird one because it's mostly euro, but it's got some other currencies in there as well. And it had in 5 years, it had its second worst week in 5 years. Its previous worst week was first week of November 22. I can't remember that far back. That was 2.5 years ago.
A lot has happened.
A lot has happened.
November of 22, we had come out of the pandemic and we were kind of anticipating that recovery that never really took off. No, that was November of 21, and that was supposed to be a recovery into November into 22. That didn't happen. And then end of 22, we were like, we're not going to be as optimistic as we were in 21 because we got it wrong, and we're going to wait and see how 23 starts. It was a cautious.
Yeah. So basically, the dollar index just collapsed last week. It started the week at 107.5 and it ended the week at 103.9, went as low as 103.5. For the dollar index, this is a humongous move. It looks like it might go back. So we're seeing a bit of green this morning. Looks like it might go back to 100. And it's interesting because if you look at our ZAR, so we got to 1805 last week and then we turned the power off. And
where are we now? I'll tell you.
1830. 1830 is the big bun fight on our ZAR. But the euro's not playing games. Euro's at 1980 because it's dollar weakness. It's just that dollar weakness. It's not a heck lot else out there that is happening. It's been driven by dollar weakness.
And when you say dollar weakness, right, interestingly enough, dollar weakness has filtered through to the extent that we, over the course of the weekend, for the first time, actually, let me tell you for the first time in how long? For the first time since... Okay, so we did do this dip back in February last month, but the price of a Bitcoin has gone below $80,000, right? From all-time highs of close to $110,000. Now, obviously, there's grounds for pullback and markets run, and there's always going to be a state of pullback, but that's now because of the Bitcoin relationship to the US dollar. And at the same time, the gold price has gone and found itself in uncharted territory again. US dollar weakness. We're now back at, let me see where we are. 2,903. We're not at all-time highs just yet on the US dollar. On the gold price, but gold price highs last month were $2,956 an ounce. This month could very well be the $3,000 month.
Yeah, absolutely.
Quite easily,
absolutely. And if it's not this one, it'll be one soon enough. I like interested in your point around dollar and Bitcoin tracking each other. I didn't really, because the chart, the sell-off last week in Bitcoin kind of mimics the sell-off in the DXY.
It does,
and all of the attempts to pay back the crypto bros with comments of crypto reserves,
strategic reserves,
is just not doing what everyone hoped it would do to the crypto space.
And the fact that I don't think everybody is as interested in the Trump meme coin as we thought they might be.
I haven't looked at it recently. So after having gone to 70 odd, it is a whole lot lower. So weirdly, I use investing.com because I only have two
just to keep
cryptos
track
on my
on
thing.
It, yeah.
But I got to get to like page 4 to find the Trump coin.
Yeah.
Where is it? Scrolling. Oh, awkward, still scrolling. Where did it go? I got wrapped things. I
the
got
live price,
10. I got it at 11, whatever.
$10.70 at the moment.
Yeah, okay.
So call it 11.
From a high of 77.
Right. So what? 85% down?
Fartcoin's down 90% from the same weekend. So the thing with meme coins, and I actually spoke about it in my other podcast last week, is that meme coins, you and I can, there's websites out there, we can have a meme coin, take us a few minutes, no fee whatsoever, literally a few minutes, and now we've got a meme coin. Now we can't get it onto platforms because they like, you know, I mean, the Lunar Oaks are going to be like, dude, I mean, crypto's going to be like really, but you can trade it on that platform and they take 1%. It's where their fee comes from. Meme coins are fun, but they're nothing. They don't have
So what are they based on, right?
memes, hypes.
Okay. So
they are by their nature, they are pump and dump instruments. By their DNA, they are pump and dumps. So yeah, and Trump's is no different. I'm looking at Ethereum, interestingly. I mean, it never got back to the highs and is now collapsing in a heap as well. All the hype around crypto was, I mean, there was the halving of Bitcoin April last year, all of that excitement, we had the run. All of the following hype around crypto was what was a Trump presidency going to do? Well, we know he's going to do a rug pull on his followers and sell them meme coins at $72. He has no, I mean, he made statements at the crypto conference about apparently he must hold this forever, but I'm not sure.
the crypto conference that the US hosted.
Yeah.
The one where they said, we're going to tell you guys how crypto should work because we believe we have it all figured out.
Correct.
All right. Okay. We'll circle back to that. We'll at some point in the day we will come back to whether or not the crypto markets are. You want to upset the crypto bros? Call the crypto markets a giant meme coin. No, we're not saying.
So just fun fact: it's not even the entire crypto market is $3 trillion. That's Apple. We spend a lot of time, and we have how many exchanges and presidential this and whatnot for a $3 trillion market? Apple.
You sound so disappointed. It's the size. The entire crypto market is the size of one US listed company. Well, it's a big US listed company, that being said, and there's a lot of hype around crypto. But we'll see where that story moves, because what would happen then from a investor point, and I don't know if this is even something that we could think about, right? Where typically institutional money kind of leads where markets would go, right? So if we're now stretched on valuations in the US and we're stretched in other regions and we're not really confident on going back into Asia yet, do we then pump into the crypto space? Because you now have crypto ETFs, you've got the likes of that as a potential asset class. That is a story that could play out. But given BlackRock's recent behavior and the big sell-off that they had on crypto, that leads me to wonder whether or not that is a viable alternative.
Yeah, so I mean, it doesn't throw me. I mean, so where should money be going? Right now, money should be going to gold. It should be going to value and non-US large caps. So Europe, defense. Those sort of stocks, rather than I would not be. And at this point, would I be rushing into crypto? No, because I have some crypto, and I think I have enough for my needs. But it's too volatile, too easy to rug pull. You know, even a Bitcoin. At some point, it gets interesting again. But I mean, to be clear, the crypto I currently hold, I started buying at 8,000. So
so you've averaged in very nicely at this point.
Yeah, no rush.
Yeah, and if we're looking at the market, I mean, there's conversations that you could argue a pullback down to even 60,000 on the Bitcoin price at this point, and anything can really happen between here and then. Like you say, the volatility is probably what concerns people the most. If you are out there and you are looking at markets and wondering, do I hide somewhere? I think what you're saying around going for value makes a lot of sense, because there are companies out there that are producing, that are giving you tangible results from their returns. They're hitting their revenue numbers. They're moving their inventory. They're actually, I think it's that conversation that we had, I think it was probably about a month or so ago, where we said markets might just revert back to the old tried and trusted. And I think you might be seeing that is where valuations start to stretch and people are like, but is this really worth this? Eventually, we're going to go back to let's go back to what we know.
Yeah, and the Mag 7 are all great businesses. I have views around their ability to monetize AI. I think they won't. I think AI is going to be huge in our lives, but I don't think they're going to monetize it. And I give you two examples. The computer. I mean, who was making computers in the 70s? Dell and Compaq, and they're still there, but they didn't capture it. We captured it. By we, I mean planet Earth. Ditto with the internet. I mean, the WorldCom and all those companies, Netscape, sorry, they were going to capture this internet. Well, the internet's the biggest thing in our life, but
Nobody owns it.
No, but it's that. And I think we're going to go down the same role with artificial intelligence. And NVIDIA's no longer expensive anymore, but is NVIDIA a 10-bagger from here? Does it become a $30 trillion? Not a chance. No chance. So I think there is a sense of, well, hang on, there's some other really good stuff out there, like the biscuit oaks in Austria.
We like the biscuit oaks. To your point, Si, I do agree with you around the AI thing, because what I'm also seeing from a trend perspective is the market is now saturated with AI options, right? So we have use case for AI. That's going to continue to grow. But I think for someone to capture the AI market, your grok is going to have to be offering me something that Copilot doesn't offer me, so you're going to have to now move into differentiator, because AI is AI. So ChatGPT is out there, Copilot's out there. There's so many different AI versions, right? And you can run the risk of saying we're going to lock out the grok or limit it to the X platform, for example. But then you've got the likes of ChatGPT that are saying we're going to put our AI. No, it wasn't ChatGPT. Sorry, it was Google that was saying we live on Android devices, but we're going to put our AI on Apple devices now. And so you're seeing that convergence of who can be most efficient, who can be most cost effective. The likes of DeepSeek are coming out of nowhere. AI will continue to grow and continue to evolve.
And there was the Manus one that came out over the weekend out of China as well, which has maybe, I mean, the problem with Twitter these days is I just can't believe anything. So someone said he got into the code and it's just Claude 3.7. But the other thing is that they all blow my mind when I use them. Whether it's Grok, whether it's Claude, whether it's ChatGPT, whether it's Gemini, Copilot, they all, and Anthropic, they're all insanely impressive. Someone, and I think it was Viv Govender from Rand Swiss, he said to me, the problem is we've got to the point where we can't appreciate them. They're so smart these days that we just can't appreciate it. And there's still ASML who, what does AI do? Well, it needs more chips, and they make the machines that make the chips, etc., and they're not crazy like NVIDIA is, but so it's that sort of thing. I mean, the AI is only 2.5 years old from when ChatGPT 3 arrived on the scene, and it's advanced crazily, but now we're starting to say, there was all the reports last week that Microsoft was putting back on data centers and stuff, and again, I don't know the veracity of them, but at some point that CapEx spend, which is the CapEx spend by the big Magnificent Seven, has basically been NVIDIA's income. It's like, thank you for playing. At some point that CapEx spend starts to come down.
Absolutely.
Or plateau. And
then also from an NVIDIA point of view, at some point your order book runs dry, right? Because those, as you said, those that have been spending are now going to say, okay, well, we have all the processors that we need. Now you as an NVIDIA are going to say, okay, we've made a faster processor. And they say, but we don't need
And what
one.
China's doing, and this is part of the problem around sanctions or tariffs, actually. What China's doing is the DeepSeek was like, look, we can't get NVIDIA chips. Now, they probably did. How do we manage that lack of NVIDIA chips through ingenuity and coding? Everyone was rushing off here. DeepSeek said, can't go there, not allowed. We're playing here. And it kind of says to folks, well, there's other ways to do this apart from just, Gracewell, Blackwell and Grace Hopper 200s and all of those sort of toys as well.
And the nice thing about China is you've got the manpower to be able to put in the coding resource that you need to do, especially if you can then just store the data. So that's going to be something to keep an eye on. Maybe we'll do a deep dive into the world of AI, but we're going to leave this particular deep dive on that note. Stick around, folks. We're going to be jumping into our investor insights, looking at some of the stocks that you've asked us to look into, and potentially updating the wall with some new things that we'd like to add there. For now, that's the deep dive. And we wrap things up with Investor Insights. We are taking a look at some of your stock picks that you've sent through that you've asked for us to take a look at. We're going to be taking a look at cattle batteries, CATL, not cattle as in the things that go on a farm. But maybe you could find these batteries on a farm, depending on where the farm is located. We're going to be looking at that amongst other things. We're going to be diving into some of those picks. But before we get to that, we're going to take a look at, from an Investor Insights point of view, non-performing loans. Because why not?
NPLs.
NPLs, right? We're looking at this in the context of the earlier conversation that we had on market matters around the budget speech and what to do there. And this has come up in light of some recent developments from the likes of Itala Bank that have identified their non-performing loans figure. We see that around 500 plus million rand. But also we're looking at this in the context of where does the money go? Where does the money get recovered? We've seen a couple of companies go through these sorts of things, the likes of Transaction Capital with their SA Taxi business going through a bit of non-performing loans. It happens in business, and it's something that is a normal part of business where there's a certain percentage or portion of the loans you don't expect to recover. You sold the asset or you sold the goods on credit with the hope that somebody would pay you back, and they didn't, or you loaned out some money to someone to finance whatever, and they haven't paid you back in that respect. Now, from a business perspective, it's quite interesting when you look at things like non-performing loans and what it is that they can do to a company's balance sheet, because effectively you have to start writing those off at some point if there's no reasonable prospect of recovery.
Absolutely. And you should have a process as to how you write off. It's not just willy-nilly. It's, at certain points, like, Capitec at 30 days moves you to here, at 90 days moves you to there, at certain days sells it to Newton or whoever. I mean, there should be a fairly structured process in how you do it. Now, if you are a large corporate bank and you don't have thousands or tens of thousands or millions potentially of clients, you've got a much smaller client base, that process might be a little bit more phone call-y and let's meet for coffee before we help take you to go speak to the fishers. But there needs to be a process which needs to be part of the business, what's the word I'm looking for, how they do business. What
are operating procedures, I suppose?
Yeah.
What is the process for non-performing loans in the state? How do we deal with those?
I have no idea. It should be, it should be at almost departmental level. So it'll be different for us here than it is perhaps in Ekurhuleni or perhaps in Durban or wherever. It should be different for different parts in terms of Eskom.
That's what I'm saying is how do we look at it from a national level? Because bailouts are just us saying we acknowledge the non-performing loan, here's some more money to ignore it.
Yeah, and then 100 billion owned by municipalities to Eskom.
Precisely. So there was a clear plan around that, wasn't there? There was a clear thing that was mentioned at the 2024 budget speech.
Yes.
We will only be contributing towards Eskom's loans and taking on that onto our balance sheet as state, provided that these things are in place and all of that. At that point, municipalities, I think, owed around 60 to 70 billion rand. That figure is now closer to 90 to 100 billion rand, which clearly says in the last 12 months, not only have there not been any recoveries on municipal debt, that debt has increased.
Well, no, so there have been some recoveries, and some municipalities are going through the process, and still it's increased.
And still it's increased.
So let's be clear, there weren't very many recoveries or municipalities going through that process, and still it added 30, 40 billion in like less than a year.
This is why South Africans hold our ministers and our cabinet to account at the polls, because we need to, right? At some point, we need to have an understanding of these things. Back to the non-performing loans aspect of it. I was looking at the Itala release, or the Itala write-up that went through the guys at Daily Maverick.
Yeah.
There's about 1.5 billion rands in loans that the company has entered into of the 2.4 billion rand in client deposits that they've taken out, right? So effectively their net cash position puts them at about 800 million or 850 odd million rand. But that then means that you are technically insolvent,
bankrupt, you're
right?
insolvent.
Now, interestingly enough, of that 1.6 billion rand, you've marked 560 to 570 odd million of that as a non-performing loan. So you expect not to recover a third of the money that you've loaned out. Or if you are going to recover a third, the reasonable prospect of recovering that third has been reduced significantly.
There will be something there, perhaps. There might be a farm outside Maritzburg that you could sell. They owe you 10, you might get 5.
If you're lucky. Right. Okay, fine. So assume then, of course, that the non-performing loans, if you're going to recover assets attached to that, you might recover even at 50 cents to the rand, right? So you're still losing 250 million rand there. The other concern for me is from a non-performing loan perspective, the loans that were provided to employees that may or may not have qualified for loans outside of the bank. So again,
it should be illegal. Let's be quite clear.
But isn't it? Isn't there a provision around reckless granting of credit that exists in South Africa?
But also, if you work for a state-owned bank that isn't a retail bank,
but it's also not a fully fledged bank because it doesn't have a license. But
you shouldn't be allowed to take loans. I mean, you just shouldn't be allowed to take loans.
It's taking loans from your employer, right? So Sai and I are going to loan ourselves some money from whatever businesses that we have. Or actually, no, it wouldn't be because we are self-employed. So go out to your employer, folks. Ask them if they will loan you some money. Perhaps they will. We don't know. We're going to look at some of your requests in terms of what we need to put on our wall, what we need to be looking at, and sharing our thoughts around certain things. And we're going to kick things off with something that's been requested on multiple occasions: Contemporary Amperex Technologies Company Limited. Cattle batteries. Chinese company. So very long name.
I can't remember who. I think it was somebody from Anchor Capital who put me on to this about a year or so ago. So let's just start with the technology that they have. So the problem with batteries is that we're kind of stuck in our current battery environment. Yes, my iPhone has the same sort of battery life as it did all those years ago. And it's not because the batteries have got bigger. What we're doing is we're shrinking the power requirements, and that's what's been giving us longer life or helping us we're making the phones bigger. Remember the iPhone 4 was half the size of this, and it's still my favorite form factor, but anyway, so a lot of batteries sort of ends up being around tech, and these guys do clever stuff. So they've got 1,000-kilometer ranges. They've got, I think, 60% charge in 5 minutes. Now, this is not the battery technology. This is the tech stack that sits around it that is incredibly clever. They have the batteries, usually 3 batteries, so you can swap one out. So if 1,000 kilometers isn't enough for you, at 80% of your journey, you can swap out one of the batteries and get yourself to 1,400 kilometers. Clever, real sort of clever technology around it in that regard. In terms of the actual stock, it's trading at a forward PE of around 20. Weirdly, it has a dividend yield. It actually has been paying dividends because it is profitable and it does make money. It has had its share count's up 10% in a decade. That's not a stretch at all. It's not it's not cheap. I mean, it's trading at EV to sales of forward 2.4. I mean, these are not terrifyingly large numbers. The earnings per share has been muddling along and growing. The financial year 24, they're expecting a slight drop the first 3 quarters. But the trick is how do you get hold of it? It trades in Shenzhen.
Should be the Shanghai index. Potentially a Shanghai composite might be there.
Yeah, it's the Shenzhen Stock Exchange.
Right. So, interestingly enough, by market share, in terms of EV battery makers at 2020, as of January 2025, CATL had almost 40% of market share. BYD, Build Your Dreams, had just under 17% of market share there. So, big market share. Yeah. They are the biggest battery EV battery
largest lithium-ion,
So they're a big player in this
huge.
space.
They are absolutely huge. I don't want to. I mean, I don't know how to buy shares in China. How do you buy shares in China?
Well, there's indices.
I wait for them to list on Hong Kong.
Fair enough. And I think that also is part of the problem. We've spoken about this before, about accessibility to markets that makes it difficult to get into the markets. Like we were looking at the performance of the S&P earlier on, and we were looking at markets like Thailand being down 10%. How do you even buy shares on the Thailand exchange?
Well, that's easy enough. You can go, you can go and buy Well, you can go and buy the Thai ETF in the US, but that's not shares. That's
not.
a basket.
Exactly.
And you now got a lot of currencies, right? The Thai, whatever it is, wombat into dollars, back to ZAR.
This is complicated, right? This is complicated. Okay, we're going to figure it out.
Probably Interactive Brokers lets you. I mean, maybe I can do it through Interactive Brokers.
Let's see. Let's see if we can figure it out because, we want to see if we can access these markets. It's always nice to have the markets, but how do you then trade it and how do you then get involved in it? Let's see.
So there are a couple of brokers that offer it. It does seem Interactive Brokers to buy. Yep, Interactive Brokers is one of them. There are some others. So there are a couple of US brokers. I don't have Interactive Brokers, and so I can't confirm one way or the other. But in terms of the business, it looks good. When I looked at it a year ago, it was under a bit of price pressure. It certainly has come back from that price pressure and is looking a whole lot better. The targets on it are, I think, price targets up as high as 400. It's trading at 260. There's a lot of buy and strong buys, no sells, et cetera, et cetera. All looks good. Just if you can buy in China.
If you can figure out how to get into the market.
So the code is 300750.
300750. Oh, there it is. There it is. I see.
So a year ago it was down at 140. Today it's at 160. Sorry, 260. My bad.
Very interesting that you can access BYD, the smaller of the two manufacturers. You can't access cattle as easily. Does that then mean from a Chinese stock perspective, we are now back bullish on Asian markets, bullish on Asian stocks? I mean, we've touched on this. We've spoken about this from our perspective. Does this mean this is something we want to then potentially look at adding back onto?
Yeah, so I think we chatted a few weeks ago, Alibaba and the like. There's also this whole, and it goes back to the conversation we had around DeepSeek, is that tariffing China has the unintended consequences is China's like, well, okay, we can't get these, make them. So they poured huge amounts of money into chip manufacturing to try and get their own chips, and they're up to speed at mobile level, but not quite yet at Grace Hopper and Blackwell. They will get there in time. You kind of force the hand of China. So either you go backwards in some cases, or in the case of China, China's like, well, hey, here's a large pile of cash, go learn how to make those. And that is absolutely
and that works.
And we got DeepSeek, so it doesn't always work. There's a lot of failures, but China doesn't mind that.
They don't, and they also don't mind dumping a bunch of cash into some things to see if it may or may not work out. That's been the strength of the Chinese economy in the past, is they've always been able to keep moving forward no matter what's come their way in terms of stumbling blocks. So, and that's why you're seeing resilient GDP growth. You're seeing no matter how big the population gets, there is still a growing market and a growing economy from that perspective, and a very low unemployment rate, surprisingly. So very low unemployment rate.
Well, probably because if you're not working, they just send you to the rurals. and you are qualified as discouraged, so you don't count.
Very interesting there. But yes, that we are going to be looking at and seeing what we do with on our wall. We're also playing around with a couple of other things on the wall. We might drop an announcement around that in the days and weeks to come, so stick around for that. Those that have had the privilege of enjoying the wall with us throughout last year, fear not, we will definitely keep you updated as to what we are doing around that, and we'll see where that takes us. Are we adding anything else to the wall? We've added the Rand from that perspective. We've added the gold. We've added gold. We've actually looked at PGMs. I don't know if we would even venture into adding a crypto onto the wall just yet. Like you said, there's a lot of volatility there.
Do we just want to add a Eurostoxx 50? Can we put an index on the wall?
I don't see why not. And the main reason why I don't see why not is because it's our wall. We can do what we want.
Gotcha.
There we go. Okay, so Eurostoxx 50. Why are we putting that on the wall? What are you liking?
So Europe woke up 2 weeks ago after being asleep since, I don't know, the 50s, maybe. I mean, they weren't asleep. They were drinking wine and eating croissants and
Living
having
a good
pizzas and sausage and stuff. To be clear, the good life. Let's not diss them in that regard at all. They should have woken up in 2014 when Crimea was taken, but there was, wine and chocolate and pizza and stuff. It's hard to wake up. Now they've woken up. And what Germany did last week with their $500 billion essentially stimulus boost, which is defense and industry and all sorts of things. My sense is that Europe is waking up. And again, goes back to what we spoke in the earlier segment around the US returns sort of coming back to base, which means a decade of poor return in the US. And I think Europe can pick up on it. And it's not going to be tech. The big tech in Europe is like SAP and Process. Really, come on, scratch your head and help somebody. But what it is going to be is good old-fashioned industrial. And there has been a planet which has underspent on capex from a planet, roads and infrastructure and all of that. It's not just us who has that problem. We lose half of our water in Joburg that we buy because it gets lost in leaks. Yeah, so does New York, so does Chicago, so does California. That is not new or exciting. So I just got a sense that maybe it's time for Europe. And to be clear, I end every year with a power hour talking about looking ahead the year ahead. And for years and years, I was like, yo, Europe, your time is now. And eventually I just took them off the list. I just took them off the list entirely. I said, you know what, go buy cheese instead.
Go buy cheese. Oh, I remember the cheese.
Yeah.
I remember the cheese.
But maybe it's time. Maybe it's time.
Maybe it's time. Okay, so we are thinking about putting Euro Stocks 50 back on the charts. We potentially like what we are seeing at the moment. They might still have a little bit to prove themselves before we put them as blue chip or something we're really liking. But for now, they do finally make it onto the wall, and we're going to update that and see where that puts us. Unfortunately, folks, we've come to the end of the show. Thanks for tuning in. Thanks for taking the journey with us. And we will, as always, never leave you without an unfiltered opinion. This week's unfiltered opinion, we're opening up to everyone.
Oh.
This is the nice thing about having a show where you can just do these sorts of things, right? So this week's unfiltered opinion is somewhat of a question, somewhat of a statement. And it is this. Do we defund the Metro Police? Let's talk about that. Because effectively, the Metro Police, whether you're looking at Tshwane Metro Police, Johannesburg Metro Police, are supposed to enforce bylaws, manage traffic, and fight crime. We look at the crime stats. I don't know if any of you have taken a drive lately and looked at the amount of traffic lights that are off, that are unmanned. We now have more reliance being placed on outsurance pointsmen to manage our traffic lights and our intersections rather than Metro Police, which again, by definition, is their responsibility. So here's the question then, is that do we then defund the Metro Police? Do we take away the 800,000 Rand BMW 1 Series that we've given to all of them? That's 800,000 each, not for a collective number of
what
five.
a 1 Series
Each
costs?
one costs around that much. Well, they start at 695, depending on the extras you put on there. So call it 700,000, fine. 100,000 this way, that
Call
way.
it $1 million.
Right. We have a fleet of those. We have an endless amount of those. We have a lot that goes into funding the Metro Police of the country. Is it worth it? Is there a better alternative? And if we then do defund them, what then happens to those funds, and how do we redirect them so that South Africans still feel safe and the work still gets done? That's our unfiltered opinion of the week. We'd love to get your thoughts on it. But until next time, investing isn't hard. Just try it.